analyze Elliott wave theory, a popular tool which is commonly used in Forex technical analysis. So before we start, I would be happy to know some background from you. Uh, Please write me in chat on your level, background, trading skills, and some specific questions. If they appear during the session, please share them with me. Like any advice needed, any concern, I would be very pleased to help you resolve it. As for me, I'm trading since 2008 and have recently focused on so-called naked trading or trading without technical indicators. This method includes Elliott wave theory that we will examine during today's session. Just for notice, this webinar is a part of a bigger series which is called Naked Trading Strategy or Building a Naked Trading Strategy. We hold these sessions every Wednesday, so if you like it, I hope you join us again just in a week. During today's webinar, we are going to remind ourselves on key Elliott wave patterns, get to know contracting triangles as a specific Elliott wave tool, understand common rules and features of contracting triangles, and also learn and see how this Elliott wave pattern applies onto live trading. Before we start, I would like to focus some of your attention on individual trading. As I can see, most of you are used to trading individually. So then you probably know that any winning trading strategy won't be working sustainably and fine without a proven and trustful partner. This is important to be educated not in trading skills but in trading conditions as well. So please have a look on features offered by Tickmill. If your broker doesn't provide you with such essentials as competitive spreads, segregated funds, and lack of free quotes, you'd better think of it once again. As an introduction, we have a short walk around historical implementation of wave trading principles, which we know it currently. It was formulated by a scientist, Ralph Nelson Elliott, who has been working on it throughout his long professional life. But finally, he achieved to make up the core principles in the book called Nature's Law, The Secret of the Universe, where he describes all the details of wave principle that we know by now and use by now. Regarding further book references, I suggest you having a look on the works of Robert Brecher, who was one of the primary followers of Mr. Elliott and has prepared by himself very detailed written references regarding this technical analysis tool. The core things we need to know start from standard Elliott wave cycle, which is currently depicted on your screen. As you can see, the whole picture provides you the look of a complete market cycle. It's easy to distract from this image core principles of Elliott wave theory. First, corrective trends follow dominant trends. Second, wave number 2 never retraces more than 100% of first wavelengths. Third, wave 3 cannot be the shortest from the range of impulse or dominant waves. Usually they are marked with 1, 3, and 5 numbers. Finally, wave 4 doesn't overlap price range of wave 1, except from diagonal triangle. So let's have a look again. So you can recognize that in the left part you see a dominant trend, which makes up from 5 parts, and the correction trend, which is displayed on the right side of the slide, usually consists from 3 parts. Wave 2 doesn't overlap the beginning of first wave. Wave third is not the shortest wave. So this is how core principles look in practice. Let's dig into a classical wave trading example. For reference, I take United States dollar to Japanese yen chart. For our chart that shows us recent price action starting from December 2014 and finishing in April this year. I have used blue text to show you typical wave pattern, which starts from the low in the middle of January. As you see, first wave finishes rather quick. Then we see a correction move that is recognized as part 2 of our impulse dominant upside wave, and it finishes above the start of wave 1. Next, the third wave is made up of several smaller particles. If you are attentive enough, you may notice that it consists from 5 smaller parts as well. So it's a confirmation that there are 5 parts in the wave. Fourth wave again finishes in the area of wave 1 top, but doesn't go below the beginning of third wave. Finally, the wave number 5 continues the impulse upside trend. It's held above first and third part tops and finishes the impulse cycle. This is a classical implementation of Elliott wave theory, but if you are trading by yourself, you may have probably noticed that things aren't going as usual as in book references all the time, and you need to be ready to apply Elliott wave in live trading, which sometimes is not as common and usual as it's described in the books. So my intention now is to give you a deeper understanding of a specific Elliott wave tool, which is called contracting, or also known as symmetrical triangle, and learn what are the peculiar things in its configuration, what is the signal that it provides to us as traders. And so let's start with it. When you have some questions during the talk, during my description, please share it with me in chat so I can follow your questions instantly. So, a symmetrical triangle. It's basically the primary difference of this kind of triangle from different types of triangle is described here. If you see price formation with the upper line declining and the lower line rising, so the lines are narrowing in the direction to each other, then you're probably familiar with the symmetrical triangle. The normal development is depicted on the current slide. It's made up in the formula of A more than B more than C, etc. And that means that each consecutive wave is smaller in comparison to the previous one. So as you can see on the chart on the slide, wave A is usually the longest one. Wave B is a bit shorter than it, but longer than wave C. Another peculiar distinction of this symmetrical triangle pattern is that it contains 5 overlapping waves that subdivide into 3 particles. As you may remember from core Elliott wave principles, dominant trends are usually depicted as 5-part waves, and corrective trend waves are usually made of 3 parts. The clear distinction of contracting triangles is that all parts, all elements of these contracting triangles are made up of 3 parts. And this is what you can see in this chart as well. So, for example, wave A has clearly 3 parts, 3 elements, then it finishes. Same happens with wave B. When it makes its way to the low, which marks the start of wave C, in 3 elements as well. Needless to say that the same pattern continues with waves C, D, and E. So it's very important to remember that contractive triangles subdivide in 5 parts. Each of it is made up of 3 elements. Triangles are delineated by connecting the termination points of waves A and C and B and D. Wave E can undershoot or overshoot the AC line, but cannot pass the termination point of wave C. I will stop on this moment a bit further. Most of the subwaves, that means a lower degree of waves, which contribute to the bigger triangle formation, are zigzags, but sometimes one of the subwaves is more complex than the others. As you probably know, Elliott wave has lots of exclusions and specific patterns. So in order to understand markets correctly and not get stuck into fake market signals, you need to pay additional attention to some exclusions. The first type of exclusions in case of contracting triangles is the longest wave B, as it's shown on the current chart. So clearly you can see that the uptrending wave B is almost twice as longer as wave A. This is not a regular pattern, but still it happens, and if you see it, it's still possible that you're having a symmetrical triangle, but of a different principle. Another exclusion development is wave C, which should be the longest. It's clearly depicted on the line scheme, which is depicted at the moment. So the main difference is that the longest wave is not initial, but the third one. It's marked up with C letter, but it doesn't change the main principle of a symmetrical triangle. Once you know the main patterns, it's good for you to analyze signal lines. So now we are going to determine 3 signal lines that may help you enter the market and have a good winning strategy. So the first line to follow is 0B line. 0 means the start of price formation of symmetrical triangle. Usually this line determines start of wave C, and this is the first moment to enter it. Second line connects the extreme levels of waves A and C, and it determines C end. Finally, B and D line is a main signal line, which tells us about the finish of price model. In order to understand it better, let's have an example. So the first line that you mark is 0B line. 0 is marked as X here. You put it on the chart. I make it with green line. The idea that it gives to you is the first resistance level, which can help you understand when the C line finishes. As a rule, C line shouldn't overshoot, that means go beyond the level of this first signal line, and it gives you the first limit in your trading. The next line, which is very important, is AC line. As you can see on the current example, it connects two minimum levels in the current price form, and its importance is very high as it helps us to understand the lower limit of the price formation, and it gives to the symmetrical triangle a dynamic support. There is no certain rule if price should or shouldn't overshoot this line. As you can see on the current example, the E level has gone below this support line, but it has retraced very quickly, just in a matter of 2-3 candles of a selected time frame, and has shooted to the upside. So clearly, the test of the lower line can be a first signal to enter the trade. If the price formation works correctly, stop loss should be set below the minimum level of level C. So in the matter of the current example, the first trade opportunity would be the testing level at this point when price reaches and tests dynamic support level provided by AC line with a stop loss right below the minimum level of C line. If the price breaks it, it usually means that the price formation has finished and the breakout did happen in the opposite direction. Some of you can find this kind of trade a bit risky because there is no clear confirmation that the price is going to retrace in the opposite direction. For a more conservative traders, exists another trading opportunity. I will mark it with different color. And in order to implement it is B and D line. When you see B and D levels, which are already marked up on your chart during the making up of contracting triangle, you definitely know that this price structure is coming to an end. And the best way to recognize the breakout of the price formation is follow this resistance line, which is another dynamic line, and put the trade enter after the price tests and breaks above the level. Let me show you with a different price. So this is another probable entry level for a buying trade. So a good thing about this second level of entry above BD line is that you're definitely more certain and more secure about the trade probability. You have waited until a clear confirmation and you're more sure about the outcome of the trade. The bad thing from this trade is that as you are more conservative, your winning potential is smaller. If you put your entry during the test of support line, you have a lower probability of success, but you make up this price difference and you add it to your virtual wallet. Still, as you see, there is a bigger potential that you won't miss anyway, which starts from entry level above BD resistance line and goes to the top of A line. I hope that this example is clear for you and it makes up an understanding how you can trade using contracting or symmetrical triangle pattern. I want to move further with you and give you another example based on live charts. So please give me a moment so I can set it up correctly. So if everything works, you should be able to see a live chart of Australian dollar to United States dollar on an hourly time frame. Please confirm to me in chat if you can see it. So I will continue with the explanation. While you check, just a quick roundup to enter the understanding of this currency pair, Australian to United States dollar. Sorry, recent trend is definitely declining, and starting from the beginning of July, the price started to show us a kind of contracting triangle. So let me mark the start of annotation. Let me mark the start with X sign. I invite you to follow up the steps I'm doing on the live chart on your chart as well, so you can get a better understanding. Then we make up an 1, 2, 3 annotation. So this is small 1. This is small 2. This is small 3. And it goes up like this. So from the start, which is marked as X, we see a first three-wave structure, 1, 2, 3. And the first one finishes with the first part of this triangle. We will mark it as A. Let me do it of bigger size and another color. Probably red works fine. Next wave is an upside one, and it clearly consists of 3 parts as well. So 1, 2, and 3. The finish of third part of upside wave around price level 0.7450 marks up the finish of wave B. From this point starts another decline. Once again, the three-wave descending structure is quite obvious. In case you are unsure of the current pattern, let me just pay attention to you that this third element has the form of a expanded wave. So it consists of three by itself as well. And the finish of this descending line marked up with C. The fourth wave is kind of compact, but still recognizable. The end of first element finishes with the impulse above 0.7320. The correction is short, and the third wave stops at 73.50 price level. And we are coming closer to the end of contracting triangle pattern. As we work at historical level, it's quite predictable that wave E is here. I hope that the wave pattern is understandable for you. So we can move forward. In case you have got certain questions, please leave it to me in chat. The next thing that we are doing is adding the trend lines. The first trend line, according to our wave theory application, connects the beginning of price formation with B level, and it gives us first dynamic resistance. Well, we can see this dynamic resistance is quite useful right at the moment. The price has clearly breached it yesterday during the pulse upside movement, and during current European session, it has used already 3 times it as a dynamic support level at 0.7350. So from the terms of price action until the price is staying above 0.7350, we are going to see a development in upside move for Australian dollar. The next line connects the finish of waves A and C. And the main thing about this line is that the final E line shouldn't overlap it. As you can see, the price didn't touch it, so the pattern for triangle worked well. The more important line is B and D line. If you remember, it gives us the first entry signal. We connect B and D line, which is kind of interesting in the current setup. As you may see, the price has tested this resistance line for the first time last Friday on July 31st, and the test price level was put on 0.7307, and that was the first attempt to break out from it. Unfortunately, the price move was not correct, so price has declined below, but not below the minimum level of E, which is going to be our stop loss level. So the trade was still active, but in the minus until it was. So the second confirmation came up yesterday during the Asian session at the price level of 0.7280, when the price has broken above this resistance line once again, and this time it confirmed the upward trend. As a matter of fact, the price has finally given the right example. So if this example is clear, we are moving forward. If not, just let me know. Well, according to chat activity, everything is fine by now, which is not less pleasing. Let's see if I can give you a different example of the same currency pair based on daily time frame in between January 2012 and April 2013. So we are speaking about symmetrical triangle once again. First, to make up the border lines of this pair. So except for shadow spike, which definitely looks as a fake one during a certain market volatility, we are having a kind of symmetrical triangle with the upper line declining, the lower line uprising, but with a really low angle. So it can be even interpreted as price channel, but clearly you can see that there is some narrowing of the lines. So we can interpret it as descending triangle. Once again, we start with X, which was the highest level of February 2012. Probably I will do it faster because we do it for the second time already. So I will just mark up with X the extreme levels. I also do hope that the three element structure is quite visible for you. So I will just put it inside this exact formation. For example, this is part 1. This is part 2, and this is part 3. Just for reference. Yeah, and going for the D line with the shadow spike and the final line, which has been tested really technically. So basically, it's our BD line, AC line, sorry, A, B, C, D, E, right. This is A, this is C, this is B, this is D. So first we pay attention to the first signal of A and C line. It connects the top levels of the stated wave elements. The top of wave A was formed on September 14th, 2012 at the high of 1.0624. The top of wave 3 was made up on 10th of January 2013 at the level of 1.0598, and given us in a projection at price level 1.0578 that had worked at 11th of April of year 2013. The currency pair, once again it's Australian to United States dollar, has tested this dynamic resistance really technically with the precision of just 2 or 3 pips, which is definitely cool for a daily time frame, rather cool time frame. And actually that is the first opportunity to enter sell trade, which introduces current triangle pattern. So the AC line is tested and we can enter the sell trade. It can be described as an aggressive one. The conservative entry is made lower when the BD line is tested. It appeared to be almost 1 month later, on 7th of May 2013. The dynamic support level at that time showed price level of 10198, almost 0.02. The has decisively breached it for the first time, and then had retraced back again in the channel, but during that day it has confirmed the breakout from the price formation model and have gone lower since. Just for reference, so you know that the decline appeared to be impressive one. Well, this is how dynamic triangle works. Let's sum up what we've learned from today. Contracting triangle is a popular price formation in the Elliott wave theory. Its trading application is extremely useful as it just clearly entry signal, breakout from BD line, and also suggests a precise stop loss level, E wave point. Before we finish current session, I would like to give you a little highlight which I've marked as a further study. I invite you to have a notice on barrier triangle. If you're interested in application of wave theory in your trading, it will become clear for you rather quickly that not all triangle formations are adequately and precisely clear as symmetrical ones, and sometimes you meet with a bit different triangle models. One of them is a barrier one. If you want to make up a difference in it, you can see that one line in it is ascending and the other one is flat. It also gives us a continuation signal, but the main difference is that one of the lines is a flat horizontal static level. Let's see it on clear example once again. We return to live chart, and now we make it with British pound to United States dollar. So this is how it looks. The easiest way to start analyzing barrier triangle is finding this flat line. Here it obviously exists at 1.567 price level. The second point is to recognize the dynamic line. It could be ascending or descending one. Here it's clearly visible as well. So we just connect the spikes at this level. Mark it with the same color so you can distract it from the other lines. So this is our barrier triangle. It works the following way. We have got a flat line which works as a static resistance at 1.567 and the dynamic support line which connects the minimum levels of 3 waves. 3-wave pattern is rather clear here as well. So let me do it quick with X signs. So it's 1, 2, 3 as an example. Here again, 1, 2, 3, and then once again, 1, 2, 3. The wave D consists of 3 element well. So what is the signal that this barrier triangle gives to us? When we have another test of the declining line, we can enter a buying trade from it. You can see that the entry signal was quite nervous and troublesome at the moment because the price has breached the level a few times but appeared to return above the dynamic support finally. After that happened, the price was able to retest and overcome the static resistance line, which was a definite target point for this trade. So what you could have done with the exact example of this barrier triangle was a buy trade from the dynamic support back above static resistance. So once you test these tools on your account, it's high time for you to check its performance live. That is the right time when Tickmill can help you. The broker offers you classic account where you do not have to deposit as much and where the trading conditions are nevertheless great. With Tickmill's classic account, you can enjoy trading with quite a low spread that starts at 1.2 pips on EURUSD, major currency instrument. In addition to this, there are absolutely no commissions attached to this account, which is quite an important feature for the beginners, as it lets them to focus primarily on the market conditions without spending time on calculating the profitability due to the commissions. Thank you, Zamri, for the kind words. I'm very happy to recognize that the given webinar session was helpful to you. To sum up, I hope you have received the understanding that wave theory is a powerful tool of technical analysis without using indicators themselves. Next time we meet next Wednesday, the 12th of August, to follow up with another efficient and powerful tools of naked trading principles. And I will be more than happy to see you back again in our webinar session. By now, I thank you again for your attention and wish you lucky trading. Have a profitable one. Bye.